Every trader swears they've read it, the 100-year-old book they call the Bible, Reminiscences of a Stock Operator. In 2026, the AI crowd quotes it and ignores every word. Here's the part they skip. The man behind it didn't beat the manias, they ruined him more than once. The book made him a legend. His ledger told the truth, and the rules written in that wreckage are the exact thing the crowd refuses to use right now. Start with what the Bible leaves out. Reminiscences of a Stock Operator is a wonderful book, and it is a novel. Edwin Lefebvre published it in 1923. The hero is called Larry Livingston, and everyone knew he was Jesse Livermore in a thin disguise. That's the legend. The ledger is harder. Livermore made fortunes and lost them, wiped out, back again, wiped out again. And in 1940 he died by his own hand, his best years behind him. The crowd reads the novel and keeps the romance. The tape reader reads the wreckage and keeps the rules, because the rules are the only part that was paid for in full. And if you want his own hand instead of Lefebvre's, it's in the manual he wrote himself in 1940, How to Trade in Stocks. Fewer myths, more method. Every generation builds a new machine and calls it destiny. Railroads were going to abolish distance. Radio was going to abolish ignorance. The automobile, the telephone, the internet, each one a genuine revolution and each one arriving wrapped in a fever. In 2026, the machine is artificial intelligence and the fever is the same fever. Understand this. Livermore never argued with the machine. He didn't care whether the railroad would change the country. It did. He cared about one thing only, and it was how the price behaved while the country made up its mind. Because here is the pattern that never changes. Early, a price moves on what a thing earns. Then, if the story is big enough, the price stops following earnings and starts following belief. And belief is not a fundamental. Belief is a crowd, and a crowd has weather. When a market begins to move on how people feel about a future they cannot yet measure, you are no longer holding an investment. You are holding a position in a mania, and a mania obeys its own physics, not the income statement. The crowd believes the new machine makes the old rules obsolete. It is exactly backwards. The newer the story, the more the old rules matter, because the story is the part engineered to separate you from your judgment. The machine is real. So was the railroad. The railroad still bankrupted a generation of speculators who mistook a true story for a safe price. Here is where the modern crowd betrays itself, and it does it while feeling clever. Everyone wants to call the top. The exact week the second leg dies, they post the charts, they name the date, they compete to be the one who caught it. They think this is sophistication. Livermore would have called it the oldest mistake in the book, wearing a new suit. He refused to anticipate, not because he had no opinion, because he had buried too much money in his own opinions. He waited for the tape to confess the turn, and only then did he move. He made a point of selling too soon. He never reached for the last dollar at the top, because reaching for the last dollar is precisely how the mania collects its fee on the way out. Think about what timing the exhaustion actually asks of you. It asks you to be short while the thing is still rising, to fight the trend on the strength of your own forecast, to be early and call it being right. That is not contrarian genius. That is the mania inverted. The same arrogance that makes the buyers hold too long now makes the sellers short too soon. Both are trading their conviction instead of the price. The tape reader does neither. He doesn't predict the end of the dance. He keeps his hand on the tape, he waits for the music to actually change, and he is willing to look foolish for being slow. Slow and solvent beats early and broke. Livermore learned that the expensive way more than once, so if you don't guess the top, what do you actually do? You watch for what Livermore called pivotal points and for the line of least resistance, and those are his own terms from his own book, not the novel's. A pivotal point is a level where the market stops arguing with itself and finally commits. The line of least resistance is the direction price takes once it's done deliberating. You don't need to know where the top is. You need a level at which the tape admits the trend has changed and the discipline to act on that admission without debating it. In a late, narrow market, the signs are plain enough once you stop staring at the story and start watching the prices. Leadership thins. The advance leans on fewer and fewer names. The strongest stocks quietly stop making new highs while the index still grinds upward on momentum and habit. None of that hands you the day. It tells you the character of the advance is changing, that the move is running on belief, not breadth. Livermore didn't forecast that shift. He let the price confess it, and he listened when it did. And here is the part the crowd hates. Confirmation always costs you the exact top and the exact bottom. You will always be a little late by design, because a little late and certain is a method you can survive, and early and guessing is a story your account gets to tell only once. The pivot is not a prediction tool. It is permission to act, granted by the market, not by your imagination. His hardest rule was also the one that helped kill him. Once Livermore was right and in the trend, he sat. He believed the big money was never made in the thinking, it was made in the sitting. Most speculators can be right about direction and still lose because they cannot hold. They trade their own nerves in and out until the trend leaves without them. So he taught himself to sit still and let a correct position do its slow work. But sitting cuts both ways, and this is the honest version of the story. The same patience that rode a real trend to the top is the patience that held a ruined position long past the point of sense, because he fell in love with being right and stopped listening to the tape that was already telling him he was wrong. That is how the man who wrote the rules dies broke, not because the rules failed, because obeying them while your own ego is the counterparty is the hardest thing in this business, and being the author buys you no exemption. So take the real lesson, not the poster. Sit tight is not a license to marry a position. It works only when it's bolted to two things he never let go of: a position small enough that being wrong cannot end you, and a loss you agreed to take before you ever put the trade on. Size first, stop second, conviction a distant third. Patience without those two isn't discipline, it's just a slower way to be carried out. Both things can be true at once, and a tape reader has no trouble holding them. The machine may genuinely change the world, and the mania around it can still destroy you on the way to that future being real. Livermore wouldn't waste a breath arguing the first, and he wouldn't trust the second to be gentle. The fundamentals don't set the timing. The crowd's emotion sets the timing, and the crowd does not know it's 2026. It is running the same program it ran in 1929 and 1907 in every panic and every boom, because the program is human and the hardware hasn't changed. So the inheritance is small and brutal, and it fits on the back of a hand. Don't argue with the tape. Don't marry the story, however true. Don't try to be the genius who calls the top. Be the operator who is still solvent when it arrives. Size every position so that being wrong is something you survive, not something you don't. That's the whole estate. Livermore left it to us in cash he could no longer keep, which is exactly why it's worth having. He gave us the rules because he paid for them, fortune by fortune, down to the last one. The AI crowd is quoting his legend and ignoring his ledger. Read the ledger. The book they should have read was never really about a stock. It was about the one thing the new machine will never upgrade, the person holding the position. There is no asphalt boulevard to success in Wall Street or anywhere else. Why additionally block traffic? More wisdom for the patient speculator every week at charthorizon.com.